Hey, what is going on, guys? Edward here, back with another video. And the PD array we're going to discuss about in this video is going to be inverted fair value gaps. Okay, those who don't know what this is, I'm actually going to leave a playlist right here based on ICT. At the top right corner right here, you can watch them, and you'll be able to see a lot of this thing in there. Okay, just make sure to watch it after you watch this video. So I will give you a quick review and a quick explanation on how you can actually trade this inverted fair value gaps. I made a mistake here. This inverted fair value gaps, and use them in your favor. Okay, so basically right here, and a fair value gap, those who don't know, just right quick, it's kind of it's basically a 3 candle pattern. Okay, and you're gonna have a space here pretty much from the low of this week to the top of this week, right? So this is space in the middle right here. This is space. This is what is called a fair value gap, also known as imbalance. So I'm sure you have heard of that before. So this is a bearish imbalance or fair value gap right here in this area. And this is a bullish fair value gap, right? You need 3 candles, okay, to be formed. To be able to see the fair value gap, it's a 3 candle pattern, all right? Now, with that being said, let's go ahead and jump on the charts and show you here what you can do, all right? Let's see. Now, here we can see that price has recently swept these relative equal highs right here, right? We have buy-side liquidity, price is taking this liquidity out. We don't know yet if price is actually going to be coming back to the downside. What we know so far is that we do have a big imbalance right here, fair value gap in this area, right? And then if I want to go selling, right, I would like to see the price actually fail, right? Not touch and go, but I want this price to actually fail. I want this fair value gap to be broken. And I can probably at that point consider be getting into sales and then probably targeting at this previous lows right there. This would be my draw on liquidity. So from there, as I mentioned, all we have to do is wait and see if price is actually going to react to this and go up or fail. All right. So we have a strong move to the downside. Look at this. Pay attention because the body, you need to see the body actually closing below. If you don't see a body of the candle closing below, then it's still reacting right here. Price can actually continue pushing up. So we need to see a body, a full body of the candle closing below. So right here, the next one is confirming that. The next one is definitely now closing below the imbalance. This imbalance was totally broken now. Now we can use this fair value gap in our favor. Now from this point, if you want, you could already be placing a sell limit order right there, stop loss here, take profit right here. Okay, this is another type of entry model that you can take. Okay, you could either there or 50% of this inverted fair value gap. Okay, if you consider probably this imbalance is too big, that space, that fair value gap is too big, you can either enter right here or enter right here. It's up to you. Okay, any of these two. Now, where to target? You could be using targeting previous lows, sell side liquidity, or you could use the Fibonacci from the last manipulation move right there, pretty much from the high to the low, and you could be targeting probably 2 right here, between 2.5, somewhere there. It's up to you. Anyways, in this case, it'd be fine. For me, just targeting that low, it would be just fine. So let's see what the market is going to do after that. Price comes into the zone. You see it's even touching the 50% right there. Let's see. Kind of choppy, but price does end up actually displacing to the downside and even reaching our final if we wanted to actually target right here. So see, nice risk to reward. You see that the price actually came up. Look at this, respecting now. This is like this bullish fair value gap turned out to be now a bearish. It turned into a bearish fair value gap. So this is an entry model that you can use. You can actually be looking for this type of entries They're very effective as well. And let me show you another example. In this example right here, we see that we're in New York session right here. We see price recently has been building up liquidity right here. It's a nice support in this area. And we can mark this as our sell side liquidity in case we would like to go buying. Recently, of course, we also see that this happened 8:30. This would be New York session as well. We are displacing to the upside. This was a big push, so sort of coming back down. But in this area, you might say, okay, well, we do have a fair value gap right here, right? We could actually be looking for a potential sell in this area. But look at what is happening right here. This range, this explosion. All right, in this particular day right here, if you see this at 8:30, this is USD JPY. We had an explosion right here. This is news, okay? Now, pay attention because normally after news, manipulations are coming in, okay? You can even see the price is sweeping also previous highs. But I like this support right here, right? We have relative equal lows. When I see equal lows like that, I normally want to see price sweeping those lows, and then I can take action after that. I could actually be looking for a potential reversal. So look at what's happening right here. Price after the news, price decides to come back down again one more time, sweeping these equal lows, right? Now, let's mark it up. This would be my sell side liquidity right here. And then you see what's happening. At this point, we have two fair value gaps right here. I'm going to mark this one. Looks like it's the bigger one. I want to see if price really wants to go up. I would like to see this fair value gap get disrespected, okay? Remember, you can mark up probably your market structure shift somewhere here, but trying this entry model is also an early sign, an early entry. This would be definitely the point where, hey, it gives you more confidence that the market is definitely changing the direction right now. But right here in this imbalance, look at what we can get. So we're waiting to see if price is going to respect it or not. Most of the times when the body of the candle it's already closing above the 50% of this imbalance, that is sort of giving you an idea that it might actually fail. So let's see what happened with the next candle. We don't have a full break of the candle, not yet. Not yet. Let's see. Boom. We do have a full break body of the candle closing above. At this point, you could, from that point, you could actually be looking for a buy, placing a buy limit order right away, targeting previous highs, or you can use, as I mentioned, your Fibonacci. Hold on. You could use your Fibonacci from the low to the high, the manipulation, probably targeting between 2 and 2.5 in the extension. All right. But this target would be the most important right there. Let's see what happens from there. Price taps. And sort of pushing to the upside. A little slow, but it is going to our target. Let's see if it actually touched it. You see that the market actually did touch. It did touch the fair value gap, which is right here. So it did touch it. It did tapped in. And then from there, displacing to the upside, as you can see. This is a trade where we should be on break even already, taking partial profits, starting ranging. Yeah, there we go. At least smashing our TP, which is right here. This would have been the most important TP. Anything from there, it's extra, it's additional. You can still, of course, if you want, continue holding all the way to the top. But from here is very important. You see market is starting to move sideways, probably because of the hour. It's Asian session, so be careful with that. All right, don't be greedy. But you see that you can trade also this inversal, right? See where the market structure shift sort of happened, and price actually pulling back probably to this fair value gap right here if you wanted to go buying. But you see that this imbalance, this first inverted imbalance right here, fair value gap, it was giving us an early entry. way early entry. All right. So this is something that you can do. Let's see. Let me get another example. All right. This example, we see that price recently has taken an old high. So we're taking buy side liquidity right here. Normally, we would mark up this is the market structure shift, right? Somewhere there. Now we wait for price to start reversing. Now at this point, you see there's only one imbalance being printed out, which is this one. We have this bullish imbalance right here, fair value gap. Now, if you want to go selling, as I mentioned, you want to see this fair value gap being disrespected. You want to see full body of the candle breaking below. Okay, so let's see what we're going to have right here. Price is coming back into the zone. Not breakout yet. Boom. All right. This coincidentally, it's also breaking. It's also giving you that market structure shift, right? Automatically. At this point, you see you already have your inverted fair value gap. If you want to go selling, you could be placing your sell limit right here. Stop above the previous high. Take profit using the fib from the high on the low. You could be targeting old lows right here. You could be targeting, I like this low right here, right? Or the -2 right there on the Fibonacci. So let's see what price does. Price does come back to the fair value gap. And then from there, sort of displaces to the downside, all right? Now, you see, price did reach this zone. Now be careful right here, because if you don't see, you see price is actually now sweeping, taking liquidity, right? Price could actually start reversing. So this why, at least this low was very important right there to be targeted, right? Because if we start seeing displacement to the upside, price can still continue pushing up. Starting to see the reversing. You see price is starting to get choppy, but you see price started pushing up from this point. You see that in this area, there's only one fair value gap right here. Look at what happens, right? The fair value gap, this fair value gap gets ran through, right? This was a bearish fair value gap. Price sweeps the previous low, displaces to the upside, failing, right? So we have another inverted. Now, in this case, we have another inverted fair value gap. This could have been a zone to actually be looking for a potential buy. Where could you be targeting? Again, you could be targeting old highs. Look at this. Price actually swept this high. So you could be targeting this old high, either this one or this one at the very top, right? Price actually sweep. And then after the sweep, look at this. Another big displacement to the downside. So giving a potential, maybe another sell. Actually, right here, do we have a fair value gap? Probably in this time frame we don't, but we did displace after the sweep. Okay, so probably there wasn't a clear opportunity right here in the current time frame, but maybe in lower time frame you could find something. But you see that it's important, guys, that don't be greedy. Okay, trying to aim all the time to number 2 right here on the extension. This would have been a nice TP already, right? Then after that, you see what happened. Price actually gave you a buy opportunity, right? So you had an inverted fair value gap right here. Nice reaction. Another inverted fair value gap in this area to the opposite. So this, guys, is how you can trade inverted fair value gaps as another entry model. Okay, besides the normal market structure shift and then bearish, continuation bearish fair value gap, right? And go with that, or change in state of delivery, right? So it's a different type of entry model as well, that a bit earlier, I would say. So let me know, guys, what you think in the comment section. If this video was helpful to you, give it a big thumbs up. It motivates me to keep posting content for you guys. I know it really helps you. So thanks again, guys, for watching, and I will see you in the next one. Take it easy.